We know. Um, I think you can do both, right? I mean, when you got that much vacancy, you got to take the birds that are in the hand. You got to get some leasing activity done. Is there demand for bigger users? Yes, and I think that there's a price premium for that as well, and we're starting to see that. I mean, there's a handful of options now over 150,000 square feet.
But there's a handful of options, and there's only probably 2 good ones.
That are true campuses, absolutely. Yeah. Right.
So, I think that I think that Eastgate is number one. I've always loved the location. I think it gives you a lot of advantages and not quote walkable amenities, but certainly close to UTC and just the access to those amenities. But John, I think that you guys build excellent product. You know that, and everybody in this room knows that you build a good product, and your vision is a lot longer term than most. So I think that there's the good news is you can do both. You can acquire have a large block of space within multiple buildings, but you also can go after a 40,000 square foot tenant.
With regard to concessions, have you guys seen, I mean, we've been through the blend and extend business. Is that still going strong, or is that kind of seen its better day? And then other concessions, have we leveled off, or what do you guys see? Rob?
Blend and extends are still out there. They're not as prevalent as they've been. I want to say it's kind of yesterday's news because most of the tenant rep arena has kind of pilfered that segment of the marketplace. But nevertheless, it's still a landlord's. It's all right. It's good. You made money. Look at this shirt you bought. But it's still a landlord's strongest tool that they have. It's something that no one else can offer in the marketplace. And there are rents and there are deals that are out there right now where those rents are still high. And there's an opportunity for those landlords to secure those tenants long term. So a landlord can still be the friend of the tenant. So it's definitely still an opportunity that exists in the marketplace. But in a rising marketplace like we're in, there's a disconnect there. And that disconnect is the tenant's expectation looking at a lagging indicator of where rents were versus the landlord's perspective as to where those rents are going. And so it's a little bit harder, more difficult transaction. There's still, that indifference point that's fairly easy to calculate, and both parties can still win from that transaction. I mean, addressing concessions in the marketplace, it's definitely changed. I mean, we're not seeing as much in the way of free rent in the marketplace. I know there are stress points and there are segmentation points in the market. You can look at smaller transactions versus larger transactions, so it depends. But, let's say 9 months ago, Scott Ginsberg would write an article and say, okay, there's 2 months per year of the lease term of free rent. That deal's gone and done. It's not out there anymore. So that segment of the market's changed.
Yeah, I would argue that even in the best of markets, it makes sense for landlords to keep their current customers. And I don't know what it is about our industry, but there's this speculation that occurs where landlords think they can go get a better girl at the dance than the one they actually brought. And what we need to do is get the perspective that keeping a tenant is a lot cheaper than getting a new one. And so if your tool, as Rob says, is you've got a good credit tenant, that good people and a clean use that maybe is going to be expanding in the future, and you're even in the best of markets 12, 18 months ahead of that expiration, why would you take the risk that these guys move? I just don't get that. So if I owned the building, I'd be in there saying, what can I do to keep you? And I think blend and extend is a misdescription. To me, it's really doing tomorrow's deal today. In other words, if the deal I would do a year from now is priced at X and has a TI of Y and free rent of Z, let's strike that deal, but let's allow the tenant to accelerate all those benefits now. Let's take it, let's bring those benefits forward, reduce the rent, give the tenant the TIs now to beautify and remodel the space, let them expand. So, I mean, there's so many dimensions you can take advantage of as the current landlord that another landlord can't. And I think the other dangerous thing is landlords saying, well, I'm just going to wait. I'm going to, 9 months from now, the market's going to be better. Well, it's not, okay? 9 months, 12 months now, the market's not going to be much different. But, and you want to use that advantage you have now to keep them.
I think, Dave, I mean, there's not a landlord that I work with that wouldn't want to keep a good credit tenant. The challenge is when a tenant rep comes and says, okay, the lease expires in 24 months, and we want to do a, we want to renew, and we want to be at market today, and we're willing to give you a 5-year extension. Okay, so, I'm sitting there going, the next question my landlord asked me is, okay, well, what should the rent be in 2 years? I mean, that's, I think, the landlord clearly thinks the market's coming to them, and you're, not you or, Mr. Tenant Rep broker saying, all right, the market's going towards the landlord. We got to get in there and take advantage of, if I'm paying $350 today and the market's at $250, if we can compress your rent and get you to $275 and save you 75 cents a foot for the next 2 years, it's too early.
I agree. I mean, I don't think any of the three of you get that phone call from me. Okay.
No, but
I hope that guys
I'm not saying that it comes from you, but I'm saying it does come. But I think certainly, plus or minus 12 months is a reasonable period of time to start having that, that discussion.
Yeah, I think with market changes, you have to adjust your strategy and your style, right? I mean, if you're out there as a tenant rep broker or any other broker promising that you can renegotiate a tenant's lease that expires in 2 years, I think you're just flat wrong. And you're probably at risk for over-promising and under-delivering, and you're probably going to lose that client because you're going to struggle for 6 months and look like an idiot, and then someone like me is going to come along and actually represent them to do something a year from now. So I would say really be thoughtful in the advisory work that you're doing out there and what you're putting in writing, that you're not keeping the tenant base agitated. And I think if you look back at the quarterly press releases that we've done since Q1 of 07, 6 quarters ago now, we've been talking about the changing market. We've been trying to educate our clients that big space is going away, that the job market is firming, that we're seeing employment gains again. In fact, Q1 of last year, we did a measurement of our client base of all of our work in process, and we had 3 clients growing for every one shrinking.
Now, Dave, about 5 seconds ago, you just told me the market in a year or 2 years is not going to be much better than it's going to be today.
Well, it'll be
marginally. You're talking out of both sides of your mouth.
No, because there's this story is this big. What I started with early on was this big glut of inventory, this deep hole, this historically deep hole we're digging out of, right? And I personally don't like percentages because I think you get diluted by those. You've got to look at the millions of square feet we have, employment, job growth, and then try to make some sense out of it, right? So again, across all products, this isn't just an office panel, across all products, we still have a 48 million square foot problem, in my opinion. So it's going to take some years to work out of that. And so talking about the market hyper accelerating in the next year or two, I just don't buy it. I don't think we're going to have the job growth quick enough to drive rents up in any accelerated way. If you look out 3 to 5 years from now, I think there's a lot of good news on the horizon. But in the short term, I think it's going to be a big knife fight and a struggle.
I'll just make a point to, there's a flip side to the blend and extend. I mean, we're still getting requests daily for, 18 to 24 month, early blend and extend. So, and I agree with Eric, those aren't deals that we ought to be casting now, but I think a lot of landlords are guilty of fumbling or mishandling those opportunities as well, and I think it's through lack of communication. And what happens is you come to me, you want to do a 24-month early blend and extend. It doesn't make sense for us, but we say, you know what, we're going to evaluate it, or we'll get back to you. And it creates this rub when we stall them out, the tenant out. We don't communicate with them, and then here we are 12 months later having to put a transaction together, and we're already at odds with them. And so just the advice that I'd have to owners is, just communicate clearly. Don't jerk them around. Just lay out the facts and present them, and position yourself to renew those guys in 12 months.
So we have just a couple minutes left, and I've got 2 more questions, and for each one of you, if you kind of go through it quickly. San Diego seems to have it's a very unique market, at least compared to the markets that we operate in. It by and large, it's an incubator market, I think. We certainly have Qualcomm, and even I've been one lamenting about, when are we going to get the next big growth company here so they can generate jobs and be a legacy company that then in turn grows other companies. And I was thinking about this the last few weeks, and actually in preparing for this, I don't know that San Diego's ever going to be anything different than an incubator economy, and I don't think that's a bad thing. If you look at Silicon Valley this last in the first quarter of this year, in Class A office, they absorbed 1.2 million feet and dropped their vacancy 200 basis points. I mean, that's a huge move in 3 months. I don't see that happening here, but what can we do as an industry, and is it, Chad, you mentioned building different product or whatever, what can we do as an industry to help our greater economy grow and nurture those companies going forward for the benefit of all of us? And I'll just go down the row here. Dave?
So keep rents low so they can afford to do business here? I mean, it's what can we do really as a region? I think, and I was sarcastic, by the way.
Thank you.
What can we do as a region? I think you're right. I mean, having been in the community a long time, I don't think 10, 20 years from now, the nature of the tenant base is going to be much different. I mean, if you look at Northern California, you've got the Ciscos and the Oracles, and you've got this huge internet boom, LinkedIn out for 100 and some thousand square feet, and Facebook out for 100 and some thousand square feet, and a very robust venture capital industry up there that likes to fund companies that are down the street. Our venture capital industry today is sicker than it's been in 10 or 20 years. Enterprise is out of the game, Forward Ventures is out of the game. The only guys left standing are Mission Ventures trying to raise Fund 4, and there's just not much action down here. And so if the money's not here, the companies won't get started and funded here, they won't grow here. I think San Diego's always been a build-to-sell environment. There's some companies that have gone public, but even after they go public, they still get sold to a bigger fish. So it's a crazy market down here where it's a game of 10s and 20s, not a games of, there's massive, I think in Northern California right now there's a dozen 100,000 square foot and above tenants just in, between Santa Clara and Redwood City rumbling around. So it's just a nutty market up there. I just don't see it down here, unfortunately. This is an entrepreneurial community. It's not a big corporate community. But there, and even the companies that are kind of moving here, there have been some moves lately that people may have seen, like Genmark moved from Pasadena to California to Carlsbad. They have about 40,000 square feet now, and we're representing them to grow. Energy Innovations moved to Poway from Pasadena initially for 22,000 square feet, and they now have 60,000 square feet with Collins. I'm representing Altec Lansing right now. They chose San Diego to relocate to from Milford, Pennsylvania. They looked at Austin, the Bay Area, Atlanta, Boston, and Chicago, and they picked San Diego because of our strength in our wireless engineers. And so we're in leases.
That should be finalized today, by the way.
Yeah, we're in leases at Sorrento South for the penthouse floor of the Chicken of the Sea building, and they're going to hire 40, 50 people in the next year. So I think there's some excitement. Again, Eric, jump on me. If there's excitement, how can it be bad? Well, the reality is there are good things going on out there. Sublease inventory is down from a year and a half ago, from almost 6 million square feet to around 4 million across all product types. Availabilities are trending in the right direction. Absorption's trending in the right direction. 3 out of 4 of our clients are hiring versus firing. Everything is going in the right direction, and it's good news. I mean, you can look out on the horizon and see that there's blue ocean out there, but the question is how blue and for how long and when. I think that's really, like I said, that's the dance that we're all doing right now, is trying to figure that out. And so I'm here. Everybody says, hey, you're one of these tenant rep guys, you're negative. And the reality is, rising rents, I think, ultimately trail a recovery. They don't lead it.